This undiscovered microcap has quietly compounded over 53% per year. It has an 81% insider ownership, is in a high growth industry and is still early in its journey. If you want to find out if it will 10x from here, then this will be the most valuable video you watch today. Because when it comes to identifying future multibaggers, that are stocks that will 5x, 10x or even 100x, then you need a statistically proven blueprint for finding these stocks. That's why I've personally studied over 100 multi-bagger case studies, and let me tell you, the data is clear. The biggest winners all share the same characteristics. It's the same 10-step blueprint I personally use to generate 40 to 50% in yearly portfolio returns. So in this video, I walk you through my 10-step proven blueprint. It's called the Multibagger Blueprint, applied to a real company called Spyrosoft, one of Europe's fastest growing software firms. By the end of the video, you will know exactly how it scores on the Multibagger scorecard and whether it deserves a spot on your radar. So, as always, we will follow our 3 decision gates that separate average from exceptional stock pickers. So, the opportunity gate: can this business grow fast and sustain those returns? The management gate: is the leadership capable and aligned with shareholders? And the entry gate: are we still early and are we paying a fair price? Every 10x stock passes all of these 3 decision gates. So let's see if Spyrosoft is one of these stocks. So meet Spyrosoft. So what is even Spyrosoft? It's a Polish IT digital engineering company founded in 2016, headquartered in Wrocław, so that's in Poland. They design and develop end-to-end software systems for global clients in media, healthcare, automotive industries, fintech, robotics and industrial automation. So if you're a car maker or medical device producer building AI-powered software or embedded systems, Spyrosoft can design, code and maintain it. So they do individualized software projects for large organizations. They offer a bunch of IT services and aim to be able to provide basically everything IT related as one unified provider. They've scaled fast, so they are now employing over 1,950 engineers across Europe, the UK and India, so this also includes freelancers. And Spyrosoft is listed in Poland and Germany and is currently considering an US stock exchange entry. So it has a market cap of around 130 million euros, which is about 160 million USD. This makes Spyrosoft an under the radar compounder, so it's small, profitable and growing fast. Let's start now with the first decision gate to find out if the opportunity is good. The first one is in growth. We see the past performance is really good. Spyrosoft has compounded beautifully over the last 5 years. They grew from 2.82 euros in earnings per share in 2020 to 7.34 euros in 2024. So the revenue also grew at 43% compounded annual growth rate from 2020 to 2024. And we see that in 2025 they made a jump in revenue growth and already completed their revenue growth target for the entire year. Spyrosoft's revenue CAGR over the next 3 years is projected at 18%, with EPS growth at around 25%. So this is according to their minimum goal in their own strategic 2022 to 2026 plan. So they have a strategic plan in place and I expect them to achieve even higher growth than that, but let's stay conservative here. There are no analyst reports available as no analysts officially track this stock whatsoever. So that's a great sign for us as stock pickers. It's a stock flying under the radar, but it makes it more difficult to evaluate the stock. So growth is solid, but not explosive anymore. Growth has normalized from the 40+% levels we've seen in the last years. However, they are expanding more into media, healthcare and defense sectors in Europe, which offers lots of room to grow. Also, they are expanding in the US and they started hiring Indian software engineers, which will both potentially increase margins. That would be great for earnings per share growth, and in terms of revenue growth, they are superseding their targets at the moment and they grew handsomely in the last quarters. So they are still growth dependent and it's not as high as we would like it to be. Over to the next point, the moat. So do they have a durable competitive advantage? Let's go over this. So meaning the moat, lies in the deep client integration and domain specialization. That means they have subsidiaries that are specialized for specific types of software solutions. Also, once they have designed and implemented their customized software at their customer, so medium or large organization, they remain really sticky. They have a certified expertise in automotive functional safety and medical compliance. They have a growing reputation in embedded software and a strong customer stickiness in regulated industries. So the switching costs are not really high, but once they are in the company, it's difficult for the company to switch providers. However, the IT services market is fragmented and very competitive, with peers like Endava, EPAM or Globant also expanding aggressively. Their moat is at medium strength in total, improving but not yet dominant. Management said in the last earnings call that competition is clearly present, but Spyrosoft is well diversified with a niche specific knowledge, so they are in high leadership in customized AI solutions in those specific industries I showed you before. The score is at 3 out of 5. Now over to the runway. So what about the runway? Spyrosoft operates in a very high growth industry. The digital transformation and AI engineering sectors are growing at 15 to 20% per year, and Spyrosoft is still small, with plenty of geographic and vertical expansion ahead. Looking at the sectors they serve, you can clearly see the potential in healthcare and media sectors. They have a new partnership with BBC, which is why this is the most important sector by now. And they started licensing their proprietary software solutions with more than just one customer, so they are becoming less dependent on the struggling European automotive sector. They are expanding beyond Poland into Western Europe, the UK, the US, and building out presence in India as a scalable delivery hub. Spyrosoft is also actively looking for acquisition targets in the US, Germany, and India to grow their footprint in specific markets and save on personnel costs. Their market remains far from saturated, with a great 5 to 10 year growth runway visible. They have lots of room to grow in Europe and the US and will give it a score of 4 out of 5. Now over to the returns. This is where Spyrosoft really starts shining bright, because we can see that over the last 5 years, they've posted very high returns on equity, returns on assets, and return on invested capital. That means they are very good at choosing what they use their money for to generate very high returns. You can imagine the management team as investors themselves. So every capital allocation decision they take is an investment decision, and they generate outstanding returns for themselves and us as investors. The 5-year averages are the return on assets at 17%, which is high, the return on equity at 39%, that is really high, and return on invested capital at 33%. So that's really world class, and we see the advantages of a capital light business model such as IT services. Spyrosoft shows clear evidence of operational discipline, strategic capital deployment, and the smart use of the personnel. So these are the really exact metrics that we want to see in the future Multibagger. This gives Spyrosoft a score of 5 out of 5 for the return metrics. Now, to recap, we can see that the growth and moats are not really high, but the runway and returns get even better. And now off to the management, where we can see where Spyrosoft really shines, because let's go over who really runs the company and if they're doing a great job at creating shareholder value. We can see that the management board consists of the company's founders, and the management still owns a very high insider ownership of 81% of the outstanding shares. We can see here Konrad Weiske is the CEO, and all the other ones are also co-founders, started with the company from the beginning. This means we have a strong alignment with the management team, which is really good for future shareholder value. So the management team has a strong track record, a clear strategic vision, and a high personal reliance on the company with their personal wealth. So this earns them a 5 out of 5 in the management team score. Off to the capital allocation, and we can see that Spyrosoft's reinvestment ratio is near 100%. They've not paid any dividends in the past, and they're choosing to instead fund organic growth with the capital. That is great because they compound their used capital at high rates. We saw that before. You remember the 33% in return on invested capital. We want them to use all the capital and not pay them out as dividends, which they could instead use to deploy the capital at much higher rates of return. They expand conservatively, mostly via hiring new personnel and targeted acquisitions with no regular spending at all. So they have clear acquisition targets in the US, Germany and India, and only invest when it supports future growth. We will need to look at the return metrics in the future after the upcoming acquisitions that they plan in these countries. So we will then have to re-evaluate the metrics again. So this is exactly how future multibaggers behave. Every zloty compounds inside the business. We give it a 5 out of 5 for capital allocation. Now over to the balance sheet. So financially speaking, Spyrosoft is in excellent health. They have a debt to equity ratio of just 19%, a current ratio of 2.52, indicating strong liquidity and a positive free cash flow, so they can fund their growth fully organically. They could survive downturns easily with no solvency risks in sight. This gives it a 5 out of 5 in balance sheet score. Now over to the dilution, and we can see that they diluted nearly at all, nothing at all, so that's just a dilution ratio of 0.1% per year. And Spyrosoft already has a share option program planned for the next years, which could lead them to dilute more in the future. So Spyrosoft also plans to integrate the existing subsidiaries into the group in 2026, which should not impact share count. And in 2027, they plan to do a stock exchange listing in the US, which might further increase share count over time. So this is why I expect them to grow their share count at 1 to 2% per year in the coming years. So in total, the management clearly respects shareholders and avoids unnecessary issuance of shares. However, it could increase at 1 to 2%, but considering the high insider ownership, I expect the management team to keep dilution low in the coming years. That makes Spyrosoft score a 5 out of 5 for dilution. So let's look over the management gate, and we can see it's the perfect score. That's really, really rare in the multi-bagger success cases I looked at. And we go over to the last gate, the entry gate. So the entry gate lets us see if it's the right time to buy the stock. Looking at the valuation metrics, first we can see that it's trading at a PEG ratio of 0.62. That's really cheap given the 25% expected EPS growth. But looking at the rule of 40, we can see it only scores at 26%, and we would like that to be above 50% ideally. But the price to sales ratio is at only 1.1, which is extremely low for profitable tech grower. So this means growth is underpriced by the market right now. We can also see that the PE ratio sits at just 16.1, which is below the average of 19 over the last years, which is really good for us. We want a very low PE ratio to get into the stock. And looking at the price to sales ratio, we can see that it's currently at 1.1, which is really low, and the average was 1.4. In total, it gives a very attractive entry price, even though I would be happy with a higher value for the rule of 40. And we can go over to the market cap, where we can see it's only sitting at 131 million euros, which is very tiny for a company with high returns, global clients, and a steady cash generation. For comparison, peers like Globant or Endeavor score with a total market cap of 10 to even 20 times that. So that's an enormous upside potential as Spyrosoft scales internationally and is still very undiscovered by the stock market. This gives it a 5 out of 5 in market capitalization score. So we can see the entry gate was really good, and now over to the moment you have been waiting for, the multi-bagger scorecard. And we can see already it has a very high score of 4.41. You can see we have an individual weighting for the individual criteria, and 4.41 is really an elite multi-bagger rating. Spyrosoft clears all the 3 decision gates decisively. So the final verdict is Spyrosoft shows all the right characteristics for an early stage compounder. It has high returns on capital with ROIC of 33% and ROE of 39%. It's founder-led with an 81% insider ownership. It has a debt-free balance sheet. It is undiscovered and cheap at 1.1 ratio for price to sales. And it has a long runway ahead with a booming market and an international expansion. So could it 10x from here? Given the small size and profitability and reinvestment rate, yes, it could 10x over the next 10 years. That's entirely possible if it compounds at 25% per year for their earnings. and the PE multiple remains the same, then it will have 10x in 10.5 years. So with an expansion of PE multiple, it could even be faster than that. So if the price would be higher that the market is willing to give it. But of course, this is not financial advice. Always do your own research. But if you want more in-depth analysis of undiscovered multi-bagger stocks like this one, then subscribe now to catch the next multi-bagger opportunity before Wall Street does. See you in the next video.